Eric Muathe, Muathe.com. It is April 21st, 2017. Let's take a look at markets here. We are slightly lower for the day, but I want to share with you why today, maybe even early next week at some point, we are looking at the possibility of a big down hour. So we should prepare for that, and potentially a big down day. Let me share with you what I'm looking at. And of course, this depends on how we trade intraday, but given the way we are starting here, I want to show you what I'm looking at. The possibility of a down day, down hour looms, and let's go to why I say that. And let's begin with the Nasdaq weekly. Here we can see that this week we are trying to break out above the recent weekly closing high, and for the Nasdaq the level is 5911.74. So if the market can stay above that, close above that, that could be a weekly breakout. So the more we struggle to hold above this price, the more one can look for reasons to be playing the market from the short side or to sell this market if the breakout fails. Now, of course, if the Nasdaq can clear this weekly closing high, then that changes the landscape and maybe suggesting that the market wants to move higher. But the key for me is on the daily for the Nasdaq. Keep in mind we closed at fresh daily closing highs, all-time daily closing highs yesterday. And we can see the problem here, and it's a big deal in my opinion, is that the Nasdaq's previous daily closing high was at 5914.34. So we closed about 2 points above that, 2.44 points above that. So this is the key, absolute key to this market in the current day-to-day situation, short term. This is the key in my opinion. If the Nasdaq is unable to hold above this number, then that's a failed breakout. Failed breakouts, as we know, are notorious for taking markets lower. Also, this would be the worst type of negative divergence, in that the market made a slight improvement day to day, but at the expense of the technicals. And more importantly, the RSI for the Nasdaq failed to move above 61.8 during the most recent attempt to break out. So this is how I would approach this. The Nasdaq failing to hold above this number is a red flag and a reason to sell. The fact that the Nasdaq did not move above 61.8 while it recorded this daily closing high yesterday is a major red flag in my opinion, suggesting to me that as long as those two things are taking place, a failed daily breakout and also the fact that 61.8 was not breached on the daily, it's a red flag suggesting that the next major trend for the Nasdaq, more than likely at this rate, is now back to the idea of down market. Maybe even a major high because of this 61.8 worst type of negative divergence. If we take a look at the Dow hourly, we can see that the line we were drawing from yesterday is coming in play. It was this line right here, and this was the break of the intraday highs previously recorded here. In fact, we haven't reached those intraday highs, so that was a major high that was confirmed as resistance here and here. Now we hit this level and we are pulling back. That to me is the beginning of what could be the beginning of a pullback, and one can set themselves for a market moving lower, take advantage of any movement lower as long as this resistance continues on the Nasdaq hourly. If we take a look at the 30-minute chart and take a look at the Dow's 30-minute chart, we can see that on the 30-minute chart for the Dow, the chart we were watching yesterday at the market highs is coming in play as we open the day here, and this is being confirmed already as resistance. That's a sell signal short term as long as the market is struggling to hold above that line. Let's take a look at the Dow transports and go to the daily. I want to show you why I think this could end up being the possibility of a big down day. Number one, the Dow transports coming back to test this break, the break of the highs of March, and we are right now seemingly showing resistance. As long as this is being confirmed as rejection territory, You can see we hit this level once here and we pull back day to day. We are coming back here. We seem to be stalling. But the key why it could be a big down day, at least for the Dow Transports, if not for the general market, is where we close on the daily RSI. Should the daily RSI move below 50, expect a big down day. Keep in mind we had a big up day yesterday as the Dow Transports moved above 50. Today we get a movement below RSI 50. Expect a big down day whenever that happens. It could be today, could be sometime next week. But whenever that happens, expect a big down day on the Dow Transports. On the hourly, if we take a look at the 6 months hourly chart for the Dow Transports, we see a nice line of rejection, which we had observed yesterday. So draw a line like that, connecting the highs, no adjustment at all. This market seems to be coming back to respond to this level here. So that is a sell signal short term, as long as the market is being rejected there. Keep in mind we also drew a line somewhere there, which has been a problem. We have uniform activity above the line, back below it. That's a sell signal, which is this level here. And of course the line is generated after the break. So there was a warning break here. That's where the line comes from. And now we seem like we are coming back and we are being rejected again at this level. So you take those two lines, and as long as we are seeing rejection, chances are this is where the market starts pulling back. The level of a pullback really is determinant on what happens next on the weeklies and the monthlies. But for now, hour to hour, that's where the market is showing resistance. Let's take a look at the S&P 500 and go to its daily chart. Just want to show you that we closed above RSI 50 yesterday, which is why we had a good spike in the market. In my opinion, that's what happens when the averages change. So here we had a change, big up day, because we moved above RSI 50. We are just below or just above RSI 50 for the day. That's why I'm saying that I will not be surprised that we move below 50. That movement below 50 day to day opens the idea of a big down day. Whenever that happens, on the S&P 500 hourly, we can see that the line that we were expecting to show resistance is coming in play. In fact, with no adjustment at all, we broke below this level here, which is this highs. We've been showing resistance on this line, as we discussed yesterday, throughout the last couple of weeks. And even here was a double top at this highs here. And now we hit this level. Hour to hour, I would expect a big down hour should the S&P 500 move below RSI 50. That's why I was saying hour to hour there could be a big drop. Day to day there could be a big drop based on the S&P 500 holding above 50 or moving below 50 on the hourly and on the daily. We take a quick look at the S&P 500 30-minute chart just to confirm that the resistance we discussed yesterday is playing out, and it's this line right there. We can draw it that way, or we can even draw it connecting the highs. Either way, you end up with the same conclusion that this is where the market is stalling as we open into Friday's session. So as long as these lines are being rejected, or the RSI is being rejected, we can extrapolate that and assume here that the next trend direction, hour to hour, potentially day to day, is now back to that downside expectation. Let's take a quick look at the VIX. And yesterday I was talking about the possibility of this line holding, or you can even draw it like that. Either way, those two lines, if they can hold here, then the VIX is stabilizing. Keep in mind we had the daily breakout here just at about 13. We haven't broken below that, so the breakout on a day-to-day basis continues. And I was saying yesterday we need to be watching out here for a potential breakout. Should the VIX take out the recent daily closing high, the level to watch there is 15.96. Movement by the VIX above 15.96 would be telling us that the market is going to see continued pressure to the downside. So the daily chart for the VIX, as long as it can continue holding, is a good sign for those who are bearish. And keep in mind, any future breakout in the coming days above 15.96 would be suggestive of a market under some tremendous downside pressure. So set an alert should the VIX break out above this level. The idea there would be to position yourself short. I would like to rush this video to you guys, so subscribers, just make sure you take a look at the most recent market analysis here, either on the videos link or on the premium tweets. There's gonna be some ideas that you can take advantage, especially if the Nasdaq continues to struggle and hold above its daily breakout. That's the key on the Nasdaq daily. Failure by the Nasdaq to break out is a sign of a market that could struggle. And so the ideas should be on the videos link. This one here is going to have some ideas for you to consider, and also take a look at the premium links page for some recent ideas that I think are still alive and could actually be offering an opportunity so long as the Nasdaq's daily breakout is struggling. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings.